Available inventory keeps growing. The increase in unsold homes available on the market this week was the biggest in many years. If you recall the video last week, we actually forecast a pretty big week this week of available new inventory. It turns out to be bigger than I expected. The model expected maybe 27,000 growth in homes available, single family. We ended the week with 31,000 more homes available on the market this week than the previous week. So the question is the market pulling more sellers trying to get out before it all crashes, or is this just a drop off in demand? It's probably a little of both. In some ways, you could say that the cure for low supply is more supply. And so ironically, the thing that seems to be incentivizing sellers is watching a lot of other sellers on the market. A year ago or so, I hoped that maybe the cure for our record low supply would be sellers seeing the opportunity with less competition, but it looks like actually sellers need the opportunity vanishing before they decide to list. It's ironic. It's a fascinating problem, though, and though in aggregate right now, it looks like this change in inventory is really the demand side backing off, allowing the available inventory of those sellers to build up a little bit from the record low we've had for 2 years. There aren't huge waves of new sellers hitting the market, so it's just that buyers are less maniacal right now. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing and the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos reports with your clients, your buyers and sellers right now, it might be the time to step up. Go to altosresearch.com and book a free consult with our team. Because everybody is worried about what's happening right now. They need you to help them see clearly. I'm Mike Simonsen. I'm the CEO of Altos Research, and here's what we're looking at for the week of July 4th, 2022. Happy Independence Day. With 475,000 single-family homes on the market this week, we have our highest level of unsold inventory in about a year and a half. The inventory grew by 7% this week alone. Inventory is rising quickly on a percentage and also the absolute basis. It's rising faster than normal for this time of year. Inventory usually rises in June, so this is good. But it's rising notably faster than normal Junes. July 4th week, the holiday, usually marks the turn for the summer plateau on homes on the market. You can see each year has this summer plateau in the curve. By July 1, most of the homes are on the market. Inventory will climb a bit through late summer and then decline in the fall. This year, at the far right side of the chart here, the slope is still pointing up sharply. Normally inventory actually gradually rises through the summer, and we obviously haven't turned the corner yet. In fact, most years the July 4th holiday week, this week now, it actually has a decrease in available inventory. So this year we'll expect what we report next Monday will be simply lower growth, slower growth, but we'll see if inventory the pace slows or if it keeps shooting up from here. It's a signal to watch. Here you can see the absolute levels, the changes in inventories week to week over the last bunch of years. Each bar above the line is a week when inventory rose. Each below the line is a week when inventory fell. This week, the available inventory of unsold single-family homes rose by 31,000. You can see that's the biggest week anywhere on the last 7 years on this chart. And so it's not just percentage levels, it's the absolute levels too. This coming holiday week, we should see that dip or at least slow the growth. There are lots more weeks of inventory growth to go for the rest of the summer. But one signal I'll be watching is for whether there are any more weeks that meet or beat this 31,000 number from last week, that'd be quite unusual. Normally, inventory will be slowly receding, slower growth for the rest of the summer. It'd be very telling if we hit this sort of spike again. The brown section at the far right of this chart here is how that looks. This is the week-by-week forecast for the rest of the year. As of right now, you can see that last week was 31,000, and we expect that to be the peak in new listings volume for the rest of the year. Normally, that peak is the third week of May, and if you recall, 6 weeks ago, we hit that peak of 26,000. So we blew past that number this week, and that's pretty telling. As of right now, we expect gradually lower peaks for the rest of the summer, but it's one place we can keep our eye on. Does inventory keep breaking through the normal seasonality, or do we start returning a little bit to a more balanced market? Meanwhile, the median price of single-family homes in the U.S. is bouncing around this $455,000 level each week. Prices actually ticked up a tiny fraction from last week. As we roll into the second half of the year, this is when home prices start easing back for the fall. That prices have held up so far is probably a sign of strength. We see inventory growing, but we still see plenty of buyers buying too in much of the country. So the median price of the newly listed cohort also held steady this week at $420,000. The price of the new listings measure, that's the light red line here, is the leading indicator. Pricing was so strong earlier this year and is only now starting to ease back a touch. So this is one of the signs that sellers aren't panicky yet. Enough homes are selling quickly enough that the latest sellers, they're not resorting to steep discounts. It's sort of fascinating to watch. It's kind of a bifurcated market. Buyers are still buying lots of homes, even while they're buying fewer homes than they were in the crazy spring. So a slowing market that still has tight inventory and reasonable demand. Speaking of the demand indicators, the pace of the immediate sales has still held steady this week, even as inventory was climbing. So almost 23,000 immediate sales across the country this week, with 91,000 new listings that didn't go into contract immediately. So that's more unsold new listings than we've seen in a couple of years in any week. With 20% of the new listings that went into contract essentially immediately, that's way fewer than earlier in the year, but it still shows actually buyers buying. On the other hand, the demand indicator that was previously insatiable is obviously slowing each week. One characteristic of a really hot market is that even the junk homes sell. The ones which need a lot of work or have like peculiar flaws, or if they're overpriced. So when the market turns, these are the first ones to sit. If they sit too long, they take a price reduction to be more appealing. And more homes took price cuts this week, demonstrating the weakness in buyer demand. So this is what I mean by the bifurcated market. A big chunk of homes were overpriced, and they were relying on people moving from California and New York to support the high asking prices. Those buyers have slowed, and so price cuts are increasing rapidly. Just over 30% of the homes on the market have reduced their asking prices recently. This is a totally normal share of the market, but it's the most we've seen since 2019, so it feels like a lot. It's also rising rapidly each week, rising much more quickly than we've seen in many years. Surprised sellers are learning that it's not March anymore. In the coming weeks, we're going to keep an eye on the slope of this curve. The steep upslope that we've been on shows how quickly the market changed. That's the dark red line here. The levels of price reductions they're just normal for this time of year now. But normally the slope by July, the slope of that price reductions curve starts to flatten. It's been so steep with so many new price cuts each week. You could see how quickly we returned to normal from the record lows. It took about 12 weeks. I expect the country to get to about 40% price reductions by September before resetting for the holidays and next year. So steeper than that by September implies demand is continuing to drop. Shallower than that will imply that the market is finding some balance. So we're going to keep an eye on this curve, the price reductions curve, as well. So agents, these are the challenges that your buyers and sellers are facing right now. When you're counseling your buyers and sellers, they need the data to help them make the right decisions. So yes, the market is still actually surprisingly strong. It keeps surprising me for the homes that are priced properly. Still, almost 20% of our new listings went into contract essentially immediately this week across the country. But price reductions are climbing so quickly, we can't ignore that trend. The ones that don't price right are going to have even tougher conditions later in the year. If you need to have these conversations with your buyers and sellers right now, go to altosresearch.com, sign up now so you can have the data in your hands and the hands of your potential buyers and sellers today. Okay, that's all the data we have time for this week. More next week.